CFO coach, and thank you for using this tax planning tool. I'm going to jump straight into the tool now and start explaining to you how to use it. So when you bring it up, the first thing you want to do with this tool is you want to just create a copy of it. So top left is File, make a copy, add your details in, press OK, and then it's your copy that no one else can see so that you can start using it. So before I start though, I just want to make it very clear that this is a tax planning tool for purposes of cash flow and making sure that you understand that you're going to have an estimated or you're going to have tax payments at some point, and just trying to wrap your head around that. This is not an absolute figure. This is not, please do not use this tool to try and determine your actual tax liability at the end of the year. Those are a far more complicated process. You know, it already depends whether you're an LLC or an S Corp, or what your individual tax rates are, what your deductions are, what your household looks like. And those are really, it's a detailed return, which you need to use either a CPA or a tax accountant for. So this tool is really an internal tool. It's not used to submit anything to the IRS. It's an internal tool where you can just get a sense of what your tax liability could be so that you can plan effectively from a financial point of view. Okay, so the first thing you do with this tool is obviously everything in yellow is customizable, so we're going to use that to create our information. Everything else is a formula, so try not to play around with that unless you are fully aware of what you're doing and you're trying to change the outcome. So the first thing is at the top it says your company. We use ABR Consulting is our test company here. The second one down here is your name. I put Adam in, and then we want to just put in an estimated tax percentage for both your federal and state tax. So for federal, you can go down to the resources tab at the bottom here. There's a little link there that gives you the tax table for 2017. You can go into that and get a sense of what that is. So I'm just going to change that. Let's say it's 28%. And your state tax, you can go to your state tax website and you can get the different rates there. I'm just going to leave that at 8.25% for now. So the second thing is we want to look at guaranteed payments. But before I get to guaranteed payments, I just want to populate the bottom here to work out what is our profit for the year, because your tax is all based on what your profit or projected profit is going to be for 2017. So we need to map that out to see what that is before we start calculating what our taxes will be. Okay, so the first thing is we're going to put some of our income items in here. And those of you that watch the other tools, you've seen this before. These are just the ones that we are using as an example. And I'm going to just say not me there. That's really important. Let's just spell that correctly. Okay, and then rent, and then I'm just going to have a line item for me as in the payments that I'll be making as the owner of this business. Okay, so let's assume that these are our rates that we're making. These are our actuals. So obviously for the months that have gone past, so for January, February, March, April, May, June, July, and August, you need to use actual figures, okay? Because you're trying to get an actual profit figure. For the months September, October, November, December, you'll use projected figures, which we'll use just to get the entire picture. And you must have those projections in so you get the entire picture. And you can go in here every year, every month, and change the actuals just to change the final figure at the end, but it will give you a really good ballpark on what your taxes will be, okay? So $8,000 for advertising, $15,000 for salaries to other people, and $2,000 to rent. And let's assume that I paid myself $5,000 a month as a payment, okay? So there it is. Okay, so there are my four items in advertising: salaries, not including myself, rent, and then payments to myself, okay? And I'm just going to assume now that this is the same throughout the year. So my actuals and my forecast is all the same. This is for the sake of making this a little bit easier. So I'm projecting to make a profit before tax of $10,000 a month in this business, okay? And this business is, we're treating this as a flow-through entity, okay? So S Corps, if you've got an S Corp, it's a little bit different, so I wouldn't use this tool as an absolute. I'll talk to your CPA or your tax practitioner, and they'll help you a little bit further there. But if you're an LLC, this is a great way to do it, is what we're saying is at the end of the year, we have made a profit in this business of $120,000, okay? And you'll see it, things populated at the top there, $120,000. And this table at the bottom here starts to work out what your tax liability will be based on those rates and making $120,000, okay? But what is important to note is that because it's a flow-through entity, you also need to factor in the money that you received from the entity in terms of a salary, okay? And so this is this line item number 24. So if I received $5,000 a month for 12 months, I've received $60,000, a guaranteed payment to myself. So I need to add that into this guaranteed payment at the top here of $60,000, okay? And what it shows now is that my tax, I'm being taxed on $180,000 income for the year. And how is that? Okay, well, one part of that is the $60,000 that I've earned every single that I've earned throughout the year at $5,000 every single month, as well as the $120,000 profit that I'm reflecting in my business at the end of the year. Now, you're not double accounting because you have in effect made $180,000, the 120 from the profit and the 60 that you paid yourself. If you want to look at it a little bit differently and you want to say, okay, let's remove myself completely that I didn't receive any salaries, okay? So I remove myself completely. You will see that your profit figure is 180. Then I can take out my guaranteed payments because I didn't receive any, you're saying you didn't receive any guaranteed payments. You'll see that your tax is being calculated on $180,000. It's the exact same calculation. The way you do it is you're just recognizing that you did pay yourself that $5,000, so it's a guaranteed payment, and the rest is a profit. Or you're saying, okay, the entire amount is a profit, and you'll see that their figures are identical. So I'm going to go back to the old one I did. They both reflect the exact same amount, so you're not incorrectly accounting in any single way. Okay, it's just a different way of looking at it, and make sure you understand that so that you don't have the incorrect figure when you're doing this calculation. So then it will tell you that you're going to put $180,000 in your 1040, okay? Then what's 28% of that is your $50,400 for estimated federal tax payable, as well as your $14,850, which is your state tax payable based on those estimated figures that you put in at the top. And that will be the sum of the two, just over $65,000 in taxes that you'll have a liability at the end of the year based on your income level. Okay, and then you can accrue it by month, so that's $5,500 every single month that you've got to put aside for taxes. And if you're going to start looking to make quarterly tax payments, you need to make sure that you have in the region of $16,000 available to make that quarterly tax payment based on these numbers. Okay, and so that's this tool. Please, guys, do not try and use this as an absolute. This is no way or form something that you can use to submit final numbers to the IRS. This is really just for your internal cash flow planning, and it's really important that you use something like this so that you understand that you're accounting for taxes throughout the year. Do not let it come be a surprise to you at the end of the year. Then it's a little bit too late. So I really hope this is helpful. I hope you guys use this tool to great effect. And thanks again for watching this video. We hope that your businesses get stronger and stronger every year, and make sure you're accounting for those taxes. Thanks, guys.